deviate from that cash-based system, put them on the books as an asset, which makes sense. And the most extreme example is usually if you purchased a building for cash, you wouldn't just expense the building even if you're on a cash-based system, because most of us intuitively are like, well, that would mess up the income statement entirely, because you can't just have a $100,000 building expense, because I bought the building to be used over the next 30 years or so. So it should be an asset, not an expense. Well, the same thing is true for anything in theory that we're buying, that we're not consuming at the point in time that we purchased it in order to help us to generate revenue. So, and even if we wanted to be on a cash-based system for furniture and equipment, if you're on the United States system under an income tax code, the tax code is going to force you to put it on the books as an asset, possibly still allowing you to write it off with a accelerated depreciation like a 179 or special, but you're still going to need to track it that way and put it on the books as an asset. So the other thing that's a problem with the furniture and equipment is that you would think I would need a subledger tracking the assets in a similar fashion as we have a subledger for inventory, although the tracking of furniture and equipment should be easier in some ways, because the inventory is something that we expect the turnover to be turning over a lot, meaning we buy inventory, we sell inventory, we buy inventory, we sell inventory. With the furniture and the equipment, or any property, plant, and equipment, we buy it and then we hold on to it for a long time. Because the cost is high and because we're using it over a long period of time, there's not going to be a lot of transactions for the purchase of PP&E, property and equipment, as opposed to inventory, which we're going to be purchasing all the time, hoping that we're selling a lot of inventory. So that means that the transactions for furniture and equipment are going to be less frequent, higher dollar amounts, and they're ones that we're going to have to track so that we can create a subledger. The subledger, however, won't be in QuickBooks typically, or in whatever your accounting software is, at least not in the United States oftentimes, because the tax code is going to force us to depreciate it according to the tax code, at least for taxes. And that means that we're going to have a subledger in the tax software to make sure we get our taxes correct. And most tax software has the capacity to have both